You know, at this time of the year, the weather in South Florida is constantly changing, which can mean disaster for your property and your personal health. CERT Restoration is your solution. CERT Restoration is a full, certified, and insured restoration company, servicing now the Dade, Broward, and Palm Beach County. At CERT Restoration, no job is too difficult. We specialize in leak detection and prevention, roof tarping, as well as water extraction and mold remediation. With CERT Restoration, you can trust for a quick response with our world-class 24/7 emergency service. CERT Restoration has been in this industry for over 5 years. With our industry know-how, credentials, training, and extensive experience, we are proud to say we have consistently met and exceeded our clients' expectations. The rainy South Florida season is upon us. Hazardous buildup like mold has grown to be a property owner's worst nightmare. CERT Restoration take pride in spreading awareness in our community of health hazards caused by mold. Get your free property evaluation today. Call us at 866-217-7462. That's 866-217-7462. Or visit our website at CERTRestorationLLC.com.
Grand Rising, everyone. Happy blessed Monday. My name is Sabrina Valbrun, Woman in Construction. You are here listening to 9060 AM and also watching for Jaspo TV. Today we have an amazing segment. Is it a buyer's market? Is it a seller's market? We have our beautiful loan lady that's going to share some very great information with us. First, let's welcome the loan lady, and we have Laurie Stark here. Welcome. Good morning, my sister.
Good
and I'm
morning,
glad
Sabrina.
to have you.
Thank
Welcome
you
to the show.
Me. Thank you. I'm very excited to be here. Thank you. Thank you.
All right. We're going to go right along into our segment and just, conversation, because a lot of people is very confused. They're not sure should they buy, or if they have a property, they're not sure should they sell. But first, I want to know a little bit about you. Just give me a little short bio about you. Just tell the audience about
Hello,
you.
everybody. My name is Laurie Stark. I go by the Loan Lady. I have been doing mortgages in this industry for over 30 years. So when it comes to mortgages, financing, I'm your girl. I've got tons of questions. And most importantly, if I don't have the answer, I'm going to find the answer for you. So as a mortgage expert, I specialize in helping first-time homebuyers, investors, anybody, any type of job, whoever it is, try to obtain financing to get a home. The way you started off the show is right. Is it a buyer's market or a seller's market? Okay. Everyone's wondering what's going on right now.
Yes.
So let's dive in. Let's talk about it.
Yes.
First, I'll let you know how I kind of got my nickname, the loan lady, through the community. I basically just kind of am the person that people would call in regards to getting some mortgage questions. I started off as a mortgage processor first, which is basically the person that the clients would actually be sending all of their documentation to, that reviews it, and I would work directly with the mortgage bank, except the bank that's actually giving the client the money. Okay? As I was going through this process, I realized I sat myself in the person's chair, and I was like, what would I want
if it was you?
If it was me, who would I want working for me? And as I got started in the processing, I realized I need to start doing the mortgage loans. I need to start originating and being there to understand the whole process. So with that, I started, and I want to build trust with the clients. I want to make sure that people understand the procedure from start to finish. And right now, it's a buyer's market.
Oh, okay.
It's a buyer's market.
All right, we're going to go right into that so you can kind of explain. But I wanted to know, you kind of went into it. What inspired you to become, a loan officer?
I think the main thing for me was just I wanted to help people. It's like I said, I started processing and working with other loan officers and seeing how they were making other people feel. The joy of being able to say, congratulations, your loan is clear to close, and hand somebody the keys, because we all know home ownership is the American dream.
Yes.
It's the American dream. And all of us are entitled to it. It doesn't matter how much money you make. Well, it does matter how much money you make. But because you can afford. Exactly. But what I mean is that I don't want people to get discouraged and think, I only make $50,000 a year. How am I going to be able to afford a loan? We could talk a little bit more into that later too in regards to how it goes. But for me, it was just being able to say to somebody, congratulations.
Yeah.
You're approved. You're approved. Yeah. Yes. So that's just the most important thing, I think.
Okay. Well, in your opinion, what are the key qualities that makes a successful loan officer?
Well,
in your own words.
In my own words, I would
yeah.
say, well, I can only talk about my success,
Yes.
right? And I think because I'm extremely patient, because this is a process that is very difficult to understand. There are a lot of moving parts when we are going through the loan process. So I think it's very important to have patience with every person that comes to me. They're going to ask me a million questions, and no question is stupid.
Not at all.
No question is stupid. You can
you
ask
don't know,
anything, because if you don't know, you don't know. And the only way you're going to know is if you ask
the question.
Exactly. You got to ask the question.
You got to ask the question.
Communication is the key. I want to be able to talk to my clients. I want them to feel comfortable, and I need for them to be just completely transparent, you know. And I think my most important quality for me is my integrity, and my transparency. What I tell you I'm going to give you is what I can give you. What I promise you I can give you, I'm going to give you. What I say in the beginning is how it's going to be in the end. I don't switch. You know, we have a lot of people that are going to tell you what you want to hear in the beginning, and you get all excited, and when you're halfway through the process, what happens? You get stressed, you get freaked out, the loan officer made promises, and now it's not what they originally said.
It is a stressful process. You know? Yeah, buying a home.
I think for me, and I think for a lot of clients that'll tell you, I make this very, very stressless. I had a client who just actually posted on my Facebook and said, working with you was easier than ordering food on DoorDash. You know?
That's an amazing review.
And that was amazing for me, because, you know, DoorDash is like this and no stressful. Bump, 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 and you get your food. Yeah. And the fact that we went through this was $1 million transaction.
Nice.
So he was very happy. So I do take pride in that to be successful.
Okay. Sure. And how do you stay updated with, you know, with the market lending industry right now? Is it, you know, because the news is very scary.
Yes. And there's a lot of information. A lot of information. For me, it's a lot of training. I'm constantly reading updates, what's going on. I'm involved in a lot of networking groups. I am involved in a lot of industry groups, because there's I may have been in it 30 years, somebody might have been in it 40 years, but we're still learning every single day.
So is there like, and I know in construction we have an association, or is there a loan officer, you know, association where you guys go together and share information?
Yes, there are. Yes, absolutely. There's mortgage brokers associations, there's loan process associations.
Okay.
There are multiple places for us to be able to access information. Even if you're not a licensed mortgage broker, or you want to even possibly become one, there are always ways to get into information. But the industry spits out changes consistently. Every week there's a different guideline. So as clients, it's important that you find a loan officer that understands the guidelines and that can guide you through it. It's
well, we have a lot of people, you know what, that's interested in purchasing a home, and they really don't know, okay, should I call the loan officer first, or should I, you know what, maybe get an agent first?
Okay.
Can you kind of go through the loan application process, maybe like from start to finish, if someone is interested? Like,
okay,
what are the steps?
The first important thing is a consultation. You got to speak to somebody, you know, and through that is where we start with the pre-approval process. So let's just do a little quick scenario. You know, we've got Samantha comes to us and she says, you know, I'm really interested in buying a home, but I don't know what to do or how to go about it. I have a job, but what do I do next?
Okay.
So the next thing is a consultation with me. I basically sit there and I ask questions. There's a loan application you'll fill out online. Okay. You know, I have a website, and you just click the link and you complete it online, and it asks you your basics, your name, your social, date of birth, how long you've been on your job. Then we gather documents, we go through all of that, and then from that you do your pre-approval process. Once I've reviewed all of the documents, I'm able to say, okay, this is where we are, and I'm going to go ahead and pre-approve you now. And based off of the amount of income you've come in and the questions that you've answered on my application, a couple things. How much a month do you want to, can you afford a mortgage? Some people are like, I can't afford more than $2,000 a month. Okay. That's going to be the number where I'm going to be able to say, okay, based off of that, you're looking at a condo at around $200,000. You're going to need X, Y, and Z. So that's the first step. The pre-approval is the first step. You've got to gather those docs, talk to a loan officer. A lot of lenders will pre-approve you in 24 hours. I'm not that lender. Okay? I can pre-approve you, but I take my time. I do my due diligence. I gather all of my information up front at once, because it makes the rest of the process stress-free. Okay. Because the moment you get pre-approved with me, I get your information to your real estate agent,
Uh-huh.
and you're off and rolling to find a home. All I'm gonna need is that contract, and then we're good to go. That's it. Some people, my pre-approval process will run between 24 to 72 hours, depending on the client. If you're self-employed, I've got to go through those tax returns. If you're strictly a W-2 where you just get a paycheck stub, then the process goes a little bit quicker because it's a standard income.
Okay.
Unless you are somebody that works a W-2 and you are hourly and you have variable hours, then the process is a little bit more longer because I have to request a verification of employment. So let me back up a little bit.
Okay.
So I know you're looking at variable hours.
It's
a lot of information. Yeah. So variable hours really quick. So if you work hourly and you also get overtime.
Okay.
That means you're going to have variable hours because one week you might work a 40-hour week and only work 10-hour overtime. Another week you'll work 40 hours and work only 5-hour overtime. Okay. So we have to average your overtime income over 2 years. It's important to know too that you have to have overtime. You have to be working overtime for 2 years. So if you've been at a job, W-2, let's say you just worked at an office job and you never worked overtime, and then you went and took another job and you have 2 jobs but you're not working overtime on that other job, I can't utilize that overtime income.
So you got to be working overtime
for consecutive for 2 years.
Okay.
Yes, there's a lot of different things that we could spend hours talking about. Okay. But that's why they just need to call me, and I'll spend hours with the client to go over everything to get the details. Once the file and we get through the pre-approval process and you get a contract, the loan goes into underwriting with the lender. The lender then reviews everything that they do, and they'll come back and say, there's going to be a couple conditions. We're going to approve your client, we're going to give them this money, but we've got to see a couple conditions. Normally, for me, my conditions are minor. The appraisal, which is obviously the inspection of the property that you're buying. We need to verify that the value is there. If you're buying a home for $200,000, you want to make sure it's worth $200,000. So that's the real estate agent's job. I'm the one that takes care of the financing part of it. Once the appraisal is done, the underwriter might ask for a copy of the driver's license or an updated paycheck stub, depending on the process. And then from there, we gather the conditions. Once we clear those conditions, bada bing, bada boom.
So it's best to get pre-approved
before
first. You start looking for a house. So you'll speak with a loaner first,
loan officer first, and then we go to your real estate agent.
Real estate agent. Okay.
Now it's okay. Some people come to me with a real estate agent first and say, "Hey, I have an agent that and I'm ready to get pre-approved." No problem. That's okay. But no real estate agent is going to take you out to look for a home unless you have a pre-approved letter.
Oh, okay.
Okay? So either you're going to come to me first and say, Laurie, I want to see how much I'm approved for. And once I say, Sabrina, you're good to go. $1 million home. It's all yours. You're going to be like, okay, well now I'm going to find a real estate agent that's going to find me that home. Or you might already have one. I have a team that can help. Full house. Okay. So whatever you need.
All right. So what common challenges do applicants face, and how do you help them, overcome those challenges?
Well, there's a few. I'm going to share. I think the first obstacle people face is their credit. Okay? We all know credit is important. Credit is important for everything in life, right? In order to buy a house, in order to get a car, in order to get credit cards, in order to get any kind of financing, anything, it relies on your credit. If you do not know what your credit is basically to show that you have the ability to repay an existing debt on time. They're going to look at it, and they're going to look at your credit report. So a lot of people get discouraged because they're like, my credit's not that great. I go down to 500 credit score. But here's the thing. If you have a 500 credit score, you have to put 10% down. Okay? So that's the whole thing. If you have a 580 credit score or better, you're looking at a lower down payment at 3.5%. But the credit score,
huge.
3
to 10%.
But here you go, and that's an 80-point difference in your credit. So just imagine if you had a 580 to what kind of interest rate you'd get if you had a 680 or in the 700s. So there's so much to get into, but credit score is the challenge. I do have somebody that can help with credit at any time. If somebody comes to me and they need to get pre-approved, and I pull their credit, and I'm like, okay, we've got to work on this. Because lenders do require certain trade lines. You can't just have one credit card and buy a house. Because they've got to be able to see that you've got the ability to maintain credit. I tell clients kind of stay away from those credit cards that are like Macy's and those department credit cards because they're revolving debts. But they're not calculated the way an installment is. And an installment is a car payment, a secured loan. That's because a mortgage is an installment. So therefore, which means that you have a set amount that you owe and a set amount that you pay every single month.
Oh, okay.
Where the revolving credit cards, which these, it's all based on whatever you spend. So that's why it's called a revolving.
Okay.
And if you have an installment, that means it's set. So your mortgage would be $100,000 mortgage, $1,200 a month payment every single month. So installment agreements are what the banks really look at to make sure that you have the ability to repay something that you know is a set amount every month. Every month.
Oh, so that makes sense.
Because you have a Macy's card, it's $5,000 credit limit, and you owe $200. They're going to look at that, and the following month you paid it off. It's at zero. Okay, we know that you can make that $200 payment, but what if that was the $200 payment every single month? Can you continue to make that payment every single month? Okay. So there's a difference between your revolving credit and your installment credit. Okay. If there's bankruptcies, judgments, all of those things that could come up, when I pull your credit and I go through that pre-approval, I'm able to structure your loan accordingly based off of what your credit score shows.
Oh, and so it's really, I guess my next question was, how do you tailor loan solutions to meet the unique needs of each client? So it's not a one fit all.
Oh, no. This industry is not a cookie cutter box.
No.
Because you and I are different individuals. We have different lifestyles. You might have 2 kids. I might have 3 kids. You might, want a house. I might only want a condo. Yeah. You might make $1 million a year. I might make only $40,000 a year, or whatever it is. Every individual is exactly that, an individual. And I treat everybody as such. Nobody's story is the same. Yes, there are certain products and programs that certain people that have the same criteria will fit into. Absolutely. But in reality, we are all different, period. Everybody's situation is different, and it's my job to look at your entire situation as a whole and then put you in the correct program that is going to allow you to get approved based off of that situation. That makes sense.
Yeah, that makes sense. Well, my next question, I already know the answer, but it's really, what's the most rewarding part of your job?
That is just the joy of knowing that sometimes these clients come and they're scared. You were asking me about all the challenges. What about fears? People don't have the money the down payment money to come in. They feel overwhelmed. They just don't know what's going on. So for me, the joy is if they come to me with all of that anxiety, and I ease that anxiety, and then I hand them, I don't hand them the keys, but I am there at the closings. But the real estate agent hands you those keys, and to know that I was a part of that journey. Yes. Happy, joy.
Yes.
That puts a smile on my face. For sure. No matter, and it's a lot. I mean, it's stressful and it's a lot, but I fight for my clients. I want you to have this home, and I want you to know that the American dream of home ownership is possible for everybody, but you just have to have the right person there to guide you.
Nice.
You just have to have the right person there to guide you. And
So how do you? Yeah. Yes, you are. So how do you approach situation where an applicant loan application is challenging to approve?
Okay.
What will would really cause? I know the credit, but what other factors wouldn't cause for an applicant not to be approved?
I don't come across those very often because I always do my best to make sure everybody gets approved. But I will tell you, there are times where things come up, and the problems that come up is when the client is not forthcoming. And what I mean by that is I mean full transparency. I want to know the nitty-gritty, the down and dirty. I want to know exactly what your situation is.
Yeah, that's the only way you will help.
So we don't have those problems.
Yes.
I'm not going to say problems don't arise. Problems arise in every situation. I just do my best to avoid it up front. So if you're up front with it, I had a client who was not up front with me, and I'm getting ready to work on this file and to refinance this home, and he didn't let me know that there was an outstanding contractor lien on the property for $500,000. Woo. So you want to cash out $1 million on this home that you have, but you didn't tell me that there was this lien. So now, of course, you're expecting $1 million at the table, and I can't give you that $1 million because there's a $500,000 lien that you owe a contractor for work that he did. So when those problems arise, transparency is the most important thing. I try to avoid that. They do come, but to avoid it is to kind of let me know everything, even if it's stuff that you're not proud of, that you've done in the past, that you're just like, I'm not too sure. Nobody's perfect. We're not perfect in here, but my job is to kind of get you into that situation.
All right.
You know.
Well, thank you. Stay tuned. We will be right back. We're going to take a quick break. Thank you so much, Laurie,
Yes,
for being on the show. And we're going to take a few minutes, and we'll be right back.
You know, at this time of the year, the weather in South Florida is constantly changing, which can mean disaster for your property and your personal health. CERT Restoration is your solution. CERT Restoration is a full certified and insured restoration company servicing now the Dade, Broward, and Palm Beach County. At CERT Restoration, no job is too difficult. We specialize in leak detection and prevention, roof tarping, as well as water extraction and mold remediation. With CERT Restoration, you can trust for a quick response with our world-class 24/7 emergency service. CERT Restoration has been in this industry for over 5 years. With our industry know-how, credentials, training, and extensive experience, we are proud to say we have consistently met and exceeded our clients' expectations. The rainy South Florida season is upon us. Hazardous buildup like mold has grown to be a property owner's worst nightmare. CERT Restoration take pride in spreading awareness in our community of health hazards caused by mold. Get your free property evaluation today. Call us at 866-217-7462. That's 866-217-7462. Or visit our website at CERTRestorationLLC.com.
In construction with CERT Restoration, I have my beautiful guest here, Laurie Stark. We're gonna go ahead and continue the conversation, and I know you guys are learning a whole lot, and I welcome again.
Thank you.
I'm happy to have you here.
I'm happy to be here.
Yes, I guess my next question is, what advice do you have for first-time home buyers that's afraid, that's scared, they don't know, should they go left, should they go right? What advice do you have?
Okay. Don't be afraid. So first of all, don't be scared. Start early is basically what I'm telling you. Like, start your process early. Get pre-approved early. Even if you do not have all of the money right now. You know, like, first of all, let me just tell you, first-time home buyer can come to the table with 3.5%. So basically, we'll use simple round numbers. If the sales price is $100,000, you're going to need $3,500 down to buy that $100,000 home, and then there's closing costs that are associated. So it's important to get your finances early. Figure out exactly how much money you are going to have to put together. The next step would be to get pre-approved. You know, to come to me, give me a call and say, Laurie, this is how much money I have. This is my income. Again, we're going to have, I'll provide you with the whole list. I make it very, very simple. I give you details. I'll provide you with a clear list of exactly what documentation I need for you to provide. And then, most importantly, ask questions. You need to ask questions. You need to ask me, you know, how much is this going to be? What's the process of owning a home? Like, you know, because it's not just signing a contract and moving in and decorating, right? Owning a home comes with responsibilities. A lot of responsibilities. There's, you know, you've got to take, especially in Florida, you've got to deal with our homeowners insurance, our property taxes. All of these things come into play. And if you are not familiar with how that works, then I think it's important to ask as many questions. And like I said earlier, no question is dumb. You know, I'll answer everything. But, you know, we also have to be realistic. You know, sometimes I get clients that make $50,000 a year, but they want a $500,000 house. And it's just not, it's not feasible based off of that income. I'm not saying it's not possible, because you could always get co-signers and so forth. There's other people that you can have added onto the loan to help you afford that house. But we got to make sure that you get pre-approved first. Like, and most importantly, I think, be patient as first-time home buyers. Sometimes people are always in such a rush, and they don't think, and they don't ask the right questions, and then they get into it, and then they feel overwhelmed, and then it just turns into like, why did I even bother? And we know why you did it. You want to own a home. You want your family to grow, and that joy. So just, you know, ask questions and really, really think about where you want to be, like what kind of home, what area you want to live in. All of those things come into play.
Intention.
Yes.
Yeah, know what you
gotta
want.
know for
Yeah.
sure. For sure.
I know you've been in business over 20 years, and things have changed quite a lot. Can you kind of like go over what have you seen? You know, what changed from 20 years ago to like now?
Yeah.
Is it easier to purchase a home now, or was it easier to 20 years ago? What's changed?
Well, I don't want to say it was easier to purchase then than it is now, because obviously the market has changed, inflation. When I wrote my first mortgage in 1999, interest rates were 11 and 12%. Okay? But properties were 120, 130, 150, 200,000. When you look at 12% at 100,000, a 12% mortgage at a $100,000 loan, it's still affordable. It makes perfect sense.
Yeah.
Today's market, that same $150,000 home is probably close to $500,000 today. So when the interest rates are at 8% on a $500,000 loan, it makes a big difference. You know, the payment, you just can't afford it. And technology. When I first started, I was paper.
Paper.
I was paper.
I still use paper.
I was handwriting the
I do both.
Yes, I was handwriting the applications, packaging it up in a folder, using FedEx, overnighting it to the lender, waiting for them to get the package. It was nowadays we can get applications out. You sign them within a day. I'm able to get loan approvals within 24 hours once I get everything in. Like it's completely different. But like I said, the market is different today. Inflation is different today. I think what a lot of people, I guess you would say maybe 8, 9, 10 years ago, interest rates were 2.5%, 3%. I never thought in my life I would be writing loans at that amount. But the rate should never have gotten that low, because here we are today, where people want to buy, and interest rates are probably between 6.5% to 8%, depending on the program and your employment history. And people are having difficulty qualifying because our property values are a lot higher, you know. But that's why I said earlier, it's a buyer's market because properties are sitting, sellers are willing to negotiate, you know. So don't think if you only have X amount of money, you can't buy that house. If you have a great real estate agent, that real estate agent is going to fight for you. They're going to sit down with the seller's real estate agent, and they're going to negotiate. Also, too, just because that you're going into a contract and the sales price is $400,000 doesn't mean the property is going to appraise for that. And what I mean for people to understand is there's the property has to appraise, which means there are comparables in the area. Right? So obviously, if houses in that same area that you're buying are not selling for $400,000, the appraiser is not going to appraise your home for $400,000. It could come in at $380,000. And then that means your real estate agent's going to go in and negotiate for you and get that sales price down to the $380,000 instead of that $400,000. So some people think once they sign that $400,000 on that property, they're stuck into that. It's not. Depending on how your real estate agent puts that contract together, we can go ahead and get that taken care of, and they'll negotiate it for you, and you'll end up getting the property. You will get the property for what it's worth. You know, so I think that's also important, because back then, you know, what else? Appraisers changed. I used to be able to contact my appraiser directly and say, hey, my client Sabrina wants to buy this house at 1256 Lake Avenue. You know, it's listing at about $400,000, and the appraiser will be like, no problem, I'll get out there and get it done. Now, we as mortgage brokers have no access to the appraisers. After that 2008 crash that we went through, they went and did a whole bunch of regulations. And, you know, the foreclosures, there was bad mortgage brokers out there that were writing bad loans. You know, a lot of people don't understand how bad that collapse happened. If you want to know how that collapse happened, you know, there's a lot of movies out there that show it, and other things like that you could look into it. But that collapse was bad. You know, where half the country was all into foreclosures, selling bad loans. It was basically you coming to me and saying, Laurie, I have $500,000 in the bank and I make $1 million a year. On paper, sign. Okay, we want that house? There you go. And you would get that house.
That's crazy. That's
what happens. So, can't do that anymore. We're tightened up. Back in the day, those mortgage brokers can charge excessive amount of fees. I wasn't one of them.
No, she wasn't.
I was not one of them. I'm still not one of them. Because it's not always about the money for me. It's all about the reward of the client. You know what I mean? And helping the individual.
So that comes then to our next question, because I wanted you to share a success story that actually stands out in your career? And I know you may have
I have a lot.
multiple, but one that always pop up in your head, and you know what, didn't feel great, where that keeps you in that feel,
that makes me
encourage you.
Yes. Okay, I had a clients. They were in Georgia, a family. They didn't make a lot of money. They were, a lot. I for me, the joy is I like working with lower income families. And this family had 2 boys, this girl, and they were struggling. And I looked at this loan, and I was honest. I was like, listen, I'm gonna do my best for you. The I want to say the ratios, but you don't understand what the ratios are. But their income, the ratios, how much they allow was tight. So basically, really quick little lesson. The bank will, on an FHA loan, on a government loan, that you're putting
What's FHA?
Okay, FHA is the Florida Housing Administration. Yes, the Florida Housing Administration is FHA. That's the government loan. That is a loan that 90% of my first-time home buyers go into because it's the lowest down payment requirement, 3.5%.
Yeah, kind of go over the FHA and what's the requirement.
So it's a 3.5%. You have to obviously have 2 years full employment history. Wait, you can have 1 year in school. I always say employment history, but students and other, you can buy a house. If you've been in school, a college student, and you've been in school for all your college years or whatever the case may be, and you've got your transcripts, and now you are starting a job in that industry, I can utilize your college transcripts as an employment history and then your new job
income
as income. So just because you were in college for that 1 year and now you've got a job that you've been working on for 6-7 months does not make you ineligible to buy a home.
That's great information.
Because a lot of people aren't aware of this. You can still purchase. Your daughter can go to college and then come out of college and say, Mom, I want to buy a house, but I don't have the interest. You could be like, all right, no problem. We're going to show your transcripts. You've got your job, and then you could even be a co-signer for her, and she can have her first little home right out of college based off of her degree.
That would be the best way, actually, get a condo versus getting an apartment. It's like throwing away money.
Exactly.
That's great information.
Exactly.
I did not know
it's very important. So this particular client, I had to put them in an FHA loan. Now again, when it comes to your income, FHA says that 46% of your total income that you bring in a month, gross, not what you take home, your gross income. Meaning, sometimes your gross is $1,000, but then when your taxes come out of it, that's what you net. So when I say your gross income, if your gross income is $1,000 a week, that's what we use to qualify you. And FHA says that your income, your front end ratio cannot exceed 46%, which means that your mortgage payment cannot be more than $460 a month if you're bringing home
only $1,000. That makes sense.
Okay.
Yeah.
But then the next ratio is your back ratio, and that is what your housing payment is, along with your monthly debt, what you pay every month. People think, oh my gosh, I have a credit card that I owe $5,000 on. I have this that I owe this. We're not using that $5,000 as a figure. We're using what your minimum payment is on that credit card. So if you've got 5 credit cards and all the minimum payments is $25 each, I'm using that $25 to qualify you. And FHA says that they will allow up to 56% of your income and your debt to qualify you. So therefore, that means that $460 plus an additional 10% of your payments, whatever it is, $25, $30, can't exceed 56%. This client was at 45.55. It was the tightest I'd ever been. One $5 payment could set her off of non-qualification. Ooh. Now this client wasn't aware that, some of you guys, and it's okay if you have the Affirm payments or Klarna, because sometimes we want things and we can't pay for it all the time, so we have to have monthly payments. Those aren't reported on your credit report, but they show up on your bank statements.
Yes.
So if you do not disclose those debts to me, and I do not include them into your qualification, it could affect your loan approval. And remember, once you're already under contract, the contract has specific requirements. You have to have an application with the loan officer at a certain day. You have to have your loan approved by a certain day. Most importantly, when you put money down, a real estate agent and a seller is going to require you to put a little money down. Good faith deposit, right? You can lose that deposit if your financing doesn't come through at a certain time on that contract. So that's why I tell people it's important to be fully transparent. This client was not fully transparent. They had those debts coming out of a different bank account that they did not disclose to me. And then what happened was they needed to verify the gentleman paid child support. He needed to verify that he was making the child support payments. He was making the child support payments out of that bank account they didn't disclose to me.
Oh,
so once they had to provide
yeah.
me that, it was opened up a whole can of worms. Because I would have said, as their mortgage officer, saying, with all of this additional debt, I can't put you in this home for $220,000 that I qualified for. You're going to need to get a home for $210,000.
Yes.
It affects your qualification. It's very, very, very important to tell me everything.
A lot of people not aware where they have to disclose all their banking account. They thinking that, okay, I only have to disclose this main account because that's the one I'm going to be using.
Exactly, yes.
So all banks have to be listed.
Yes, all of your bank accounts, because, and it's okay that you pay out of this or you pay out of that.
Yeah.
But if those Klarna payments, those, what's the other one? Affirm payments.
Yes.
All of those payments are things you're making every single month based off of this debt, and it's not showing on your credit. We've got to count it against you.
And
because if we don't, then guess what? You are you as the client now are feeling overwhelmed and struggling to make this payment because me as your loan officer didn't do my due diligence and my job to make sure I put you in a home that you could afford. You don't want to live above your means. And it's my job to prevent you from having that happen. You know, and a lot of loan officers, unfortunately, in this industry don't care that much. They just look at the dollar sign, throw you into it, and then you're on your own. I'm not that person.
That's what I like about you. You're an educator. You are providing, a service, not just in it for like a commission.
Yeah.
And
but I got that deal done.
What I love. Yes.
I got that deal done. I worked around it. I spoke with the bank. I got the interest rate lowered a little bit. I reduced my fee, to make it happen, which I'm willing to do. I have a family to feed too. You know what I mean? We all are in it to make money, But if it's $500 away from you getting your keys, I'm giving that $500 to you for you to get your keys. You know what I mean?
Yes.
I own my home. I want you to own a home.
I love that.
That's it.
I love that.
So I was able to get these clients into this house. They were crying. They were so happy. And they were also apologetic because they tried to be slick. And they told me, we didn't want you to know about this extra stuff. They didn't realize we're going to find out about it. The lenders have also a system called Nexus Lexus. And they can find out everything and anything about you, including your traffic citations. So it's extremely important to be upfront with that loan officer. Yeah, and to have that kind of person that's going to guide you through it. And the most important thing, I think, is I'm always going to tell you what I can't do. And I'm going to tell you what I can't. I'm never going to tell you what you want to hear.
Nice.
But
that's the best way. When you're up front, there's no surprises.
No, you can't have the surprises,
So when you say all banking have to be listed, are you referring to just personal banking or business as well?
All right, well, that's a different situation. If you're self-employed, and you want to utilize your business funds towards, money from your business to buy this home, I'm going to require those business bank statements. But there's a whole other process with the self-employed buyer. Because not only, especially if you're going to utilize those business, we have to run something called a cash flow analysis, which will require 3 months of your bank statements to see exactly how your cash flow is coming in to make sure you can still afford this payment. Because we all know some of us don't like to pay Uncle Sam.
Okay.
We got to pay those taxes. And self-employed buyers make X amount of money and write off certain amount of money and only claim X amount of money. Banks are going to look at your bottom line. They're not going to look at your total gross sales as a person that's self-employed like we look at total gross income for a salaried buyer. Okay? If you're self-employed, we're looking at your net. We qualify you off your net if you're self-employed. Whereas you are a W-2 employee, we're going to qualify you off your gross. So a lot of my clients, if I have high-end clients that are like, I make $1 million a year, and your tax return comes to me, and we're looking at $1 million a year, but after all your tax write-offs, you only paid the IRS taxes on what you claimed, which was $300,000 a year. Then all I can qualify you on is on that $300,000 a year, not that $1 million gross that you're bringing in that you claimed.
Oh, nice.
So in order for us to use that, there's a lot of solutions for self-employed buyers. You know, a lot of different programs. 1099s, there's a profit and loss program. I supply a bank statement program where you give me all of your bank statements for a certain period, and we calculate that based off of the deposits. So yeah, there's a lot of information.
All right.
We might need to do a sequel.
We might need to do a part
sequel.
two.
Yeah.
Because it seems like we're going over time. But just before we go, I wanted to say thank you so much, you know what, for coming on the show. And this is the Community Trailblazers Show. And I like to give, you know what, flowers when you can smell them. So I wanted to say thank you, you know what, for accepting. I appreciate you and that you are doing an amazing job in your community.
Thank you.
You are an amazing, you know what, mother, you know what, friend.
Don't make me cry, you know, I'm emotional, you know, almost don't make me cry. Don't let me do it, you know, but thank you.
You are really, truly amazing. Your heart is pure. And I wanted to let you know that because that's when it counts, okay? But I want you to take you. Stop.
I'm not crying.
But
I got it together.
But right now, I want you to definitely take some minute. Let them know how can they reach you. You know what, your social media page, your website. Tell them how can they reach the long lady.
Okay, yes. So first of all, I'll give you my phone number. So you can reach me and you can send me a text at 561-374-4384. I am on Instagram as Laurie, and then my name is LAURIE, the Lone Lady. My website is www.stark, which is my last name, processing.com. And you can find me on Facebook just under Laurie Stark. And I'm here to answer any and all questions. And please understand too that even if I'm not your mortgage loan officer for it, you could still call me for information. Because I think it's important that we should all be informed. So thank you so very much to the Community Trailblazers and the Sabrina to have me here. And I'm here to help you guys. So I'm licensed in the state of Florida and Georgia. So if you're there, and Colorado, by the way. So if you're there in any of those states, let me know. And I have team members that are licensed in other states as well. So thank you so very much for having me.
You're welcome. There will definitely be a part 2 because we want to know about, different type of loans. What is the best loan? So we'll come back with a part 2. Again, this is Sabrina Valbrun, Woman in Construction with CERT Restoration. And you are watching the Community Trailblazers Show on WSUV 960 AM and for Jaspo TV Live, and also on 88.9 FM Long Island, New York. And we also have WOTS 1220 AM Kissimmee, Orlando, Florida. It has been a pleasure. Thank you so much for watching. Stay tuned for part 2 and have a wonderful day. And Laurie, thank you so much for being on the show and have a wonderful day.
You know, at this time of the year, the weather in South Florida is constantly changing, which can mean disaster for your property and your personal health. CERT Restoration is your solution. CERT Restoration is a full, certified, and insured restoration company, servicing now the Dade, Broward, and Palm Beach County. At CERT Restoration, no job is too difficult. We specialize in leak detection and prevention, roof tarping, as well as water extraction and mold remediation. With CERT Restoration, you can trust for a quick response with our world-class 24/7 emergency service. CERT Restoration has been in this industry for over 5 years. With our industry know-how, credentials, training, and extensive experience, we are proud to say we have consistently met and exceeded our clients' expectations. The rainy South Florida season is upon us. Hazardous buildup like mold has grown to be a property owner's worst nightmare. CERT Restoration take pride in spreading awareness in our community of health hazards caused by mold. Get your free property evaluation today. Call us at 866-217-7462. That's 866-217-7462. Or visit our website at CERTRestorationLLC.com.